PTC Industries is in the spotlight with their latest fundraise. Sachin Agarwal is the chairman managing director now joining in. Thank you so much for taking time out. Now, Mr. Agarwal, there has been a preferential issue of about 140 odd crores that you have raised. Tell us a little bit about the marquee investors that have participated and how you're looking to really deploy these funds.
Thank you very much, and a good morning to everyone. Mr. Ashish Kacholia and his firm has joined in this round of fundraise. The primary purpose for us, this fundraise, was to take forward all our investments in the area of metal manufacturing and core technologies related to metal components and titanium superalloys. We have, with this fundraise, now almost reached all fully funded capability for all the projects, which are basically 3 projects. One is our aerospace castings project, the other being aerospace materials project, and the other being last one being aerospace wrought materials, which we have just added for rolling mills and open die forging for titanium and superalloy materials.
Why do you need capital? If you're doing preferential issue, what happens with the fund which comes to the company?
So the funds primarily, as I said, they are all to be deployed in the investment plans that the company has. One of the main reasons to go with this preferential allotment was also because of the kind of investors that are coming in. And we are looking forward for the next 2 years of investment plans. And I think this kind of seals that minor gaps that we've had in terms of financial availability, which were probably, we would have taken some loans, but no, I don't think we would be requiring that much as well.
Are you doing a preferential allotment because, the stock's seen a run up and everybody who sees the stock, they say, we don't know how to value this company. The smart guys are valuing future growth right now. But for somebody who is not such a market expert in understanding cycles, they really want to know that where will the growth come from. So at what valuation FY24 or FY25 you've done this preferential allotment?
So as I mentioned in our last discussion, we not looking at it as a 2-year, 3-year thing. This is a run up to another 6-7 years or a decade of growth. The primary purpose of our company is to achieve parity in terms of capability within the country and put it at par with the rest of the world in the area of metals and metal manufacturing. Whatever gaps that are there in the country, which differentiates it from the developing countries, is what we are trying to fill. We are on that path. I think we are almost going to, over a period of next few years, bring the country to par in those capabilities and provide the platform for other equipment manufacturers to not be dependent on supply chains worldwide. At the same time, we are reversing the flow as well. The supply chains that were never existent in the country for these type of capabilities in terms of titanium, superalloys, castings, components, metals, ingots, sheets, plates, these never came out of the country. And because of the current global supply chain crisis created by China +1, as well as the Russia-Ukraine war, all that is going through a shift. And I think we are placed very, very positively, very, very significantly and very strategically in that position to take that gap. And for that reason, there is a huge focus on foreign OEMs. You might have listened, we have got orders from Safran Aircraft Engines, Safran. We have now got various approvals from some of the foreign OEMs, but over the next 1 year or so, we will be getting approvals from many more foreign OEMs. That would put us in a very, very different level, I would say.
How do you see the trajectory moving then beyond FY24? When you say that exciting growth is there, so when these tie-ups, when the order book will start firing in, how do you see the next 3 years different from last 3 years? Could you give us a sense of numbers or could you give us a sense of your order book? because that in a sense would be a guidance for our viewers and your shareholders.
So as I said, I cannot provide the guidance right now for the next 2-3 years. What I could say is that, as I mentioned last time, it would be a growth over the next, let's say after 5 years, which would be in multiples of what we are currently in terms of revenue or bottom line. Our EBITDA margins are continuously improving and increasing. We are sitting at almost close to 30% EBITDA margins currently on our existing sales. On the businesses that we are adding, what we don't exist. So if you're looking at past, we are only looking at what we have done in the past. The businesses that are added is, let's say, for the entire metals business, where we are setting up a titanium ingot or a titanium mill and a superalloy mill. Now that we have zero revenue right now. That plant is under construction and would go into production next year, or early end, next financial year. That itself is a revenue or a top line and a bottom line, which is multiple of what our existing total revenue is. So I think the businesses that are being added because of the strategic position that we have don't really come from doing this growth percent every year, because it will be coming in leaps and bounds. So I think rating it or providing a growth percentage on that, or a 20%, 30% after 2-3 years will not be there, because it will come in kind of chunks after that, once those production lines go up.
All right, good to have you on board. Thank you so much for taking time out and joining in and giving us a sense of that preferential